Good morning, folks. Frank Zorrilla here, Zor Capital, March 9th. Just going to do a quick video in regards to my daily watch list, which is right over here for 3/9 for today. Very simply, what I do in the morning is I go through my scans, and then I'm looking for stocks that fit the common characteristics of the best performance stocks within the last 20 days. I think if you really want to know what really works within your time frame, that's exactly what you need to do, is just study whatever it is, the best performance stocks within your time frame to see if what you're reading is true or not true. An easy way to do that is by going to Finvis and punching up here very simply, performance up 20% or more in the last month or so. Price over $2, average volume over 200,000. Now notice I don't have any more filters. Sometimes people have filters, whether it's stocks trading above 15, if it's trading above a certain moving average, whatever, etc. I think to begin, this is what you need to do, just to see. And then once you see what works and what doesn't work, then you can start putting certain things. If you need certain volume due to your account size, that's one thing that you can add after you go through the list. If for some reason you need a higher price stock, then you do that as well. But in the beginning, I think this is exactly what you should do, so that way you can start busting some myths that are out there in regards to trading. And you can change this based on your time frame. If for some reason your time frame, your average holding period for your trades, the ones that work out, the ones that you like, is 6 months, then you put 6 months. If it's a quarter, you put a quarter. But if you're buying and selling swing trading and your trades, your average holding period is roughly whatever it is, 20 days, then you have to look at what works best within that time frame. Okay, and you'll be surprised to see some of the things you come up with. Either way, FLDM, I like these stocks if and only if they go through yesterday's highs. Yesterday's highs is right over here, this number right over here. If they don't go through that level, then I have no interest in getting involved. And typically the way it works is very simply, the market opens by 9:40, 9:45, I'm putting my buy stops in. The best time to put my buy stops is when the market gaps down, so that way, because certain times what happens at the opens, you might have a stock that gaps up. That's an issue for me. You also might have a stock that has a very wide spread, a dollar spread in some of these large cap, high price stocks in the beginning, and you can get involved, so you might miss it. So I'm putting my buy stops typically 10 cents above the market price or yesterday's highs. If the market takes me in, it'll trigger me in. If for some reason they don't go through that high, then it'll keep me out. And that's how you know whether the market is healthy or not, when things are triggering, things are working out. So FLDM, looks interesting to me here, going through 662. There's been a few, some insider buying just recently. I like the stock here. DO, this is not your typical play for most people that look at technical analysis in a certain way, where they have to see the stock, be at a 52-week high for them to call it a breakout. Today, for some reason, a lot of oil and gas plays printed very small inside day candles. The actual ETF XOP printed an inside day also. You always want to be in the lookout for it. Stocks that are somewhat volatile, sectors that are somewhat volatile, that print an inside day. That typically means that the most previous move is coming to an end, and it might be actionable. DO is actionable to me going through 1479. MRO, same thing. Actionable, buy stop 1503. If it gets there, great. If not, it's then you don't get involved. FANG is one of these oil and gas plays that's been holding up extremely well, down 3 days in a row. I like it going through 126.96. ERX will be the easiest route. Okay, when you get involved in this, when you have a situation when you have a whole bunch of stocks within the same sector, specifically in the oil and gold mining sector, 9 out of 10 times you're better off going with the ETF, specifically the triple, if it's for a short-term trade, because you're going to get a bigger bang for your buck, and then it also takes away that company-specific risk. On any given Sunday, okay, when you look at the gold mining sector and you look at the oil sector, and they're moving, chances are that the triple ETF is going to outperform almost every single stock for that short-term time frame. So if I see these things triggering, I might just jump on ERX or Gush. CPRX, something that's been on the list for for a few days already. I like this stock going through 329. Again, typically my buy stop will be at 339. UAA, looks okay. Not crazy about this one, but it looks all right. Buy stop 1759. APPN has been on the list for the last couple of days. Buy stop going through, yesterday's high. Gush, that's just another oil play, triple ETF. I like it going through 2230. RAYM down 4 days in a row. This is a great scan, by the way. If you look at some of these stocks, the stocks are the best performing stocks in the last 20 days, you're going to realize that a lot of them start their moves after being down multiple days in a row. I like the stock going through 1985. RCKT, holding up well. Nice little, pattern here. I like the stock going through 1859, and ADVM is something that we're long already, that I'm willing to buy more if it goes through 705. The stops on these stocks for me is typically the day low or a 3-day low. In this case, it will be roughly about 660 just to give it some room. On FLDM, I can give it a low here of roughly $6.20. If it breaks out, I can raise that stop immediately. DO is going to be right over here at 1430. Give it, 10 cents, 1423. So from a swing trading standpoint, what I'm looking to do is get involved in very low risk reward situations where once they trigger, my stop is not that far away and I can raise it immediately. So either way, trading well and be well. But more importantly, before I let you guys go, this is part of a portfolio, okay? I have my passive ETFs, the SPY, the QQQs, the IWM, which I'm holding. And that's just the passive stuff because the market has a tendency to move higher over time. So you want to be involved in those things. And the reason why I don't talk about the market or mention the SPY or IWM or the Qs that often, because you don't want to micromanage something that should be macro, okay? The market has a tendency to move higher over time, okay? So you want to hold on to these things and not look at the daily fluctuations of the SPYs. So swing trading, in my opinion, should be part of an overall portfolio. It should not be your entire portfolio. That's just way too hard for 99.9% of the people. That's just way too much. So you want to hold on to some SPY, IWM, QQQs. You want to have some long-term strategies, and also you want to take advantage of the tendency of stocks to move in short-term bursts. And that's how you create alpha. This is only pretty much typically for the person who has time to do this. So trade them well and be well. And if you have any questions, you can feel free to email me or at me on Twitter.